Okay, welcome guys. It is Wednesday night, August 20th, in preparation for Thursday, August 21st trading day. I did this for some of those in the room who have a tough time seeing my um, portrait screen rather than landscape screen. So went ahead and put this up here, show you, and then we'll get into the charting here in just a moment. But let's continue on with Roy Longstreet's what it was, a viewpoint of a commodity trader. Look before you leap. One of the greatest mistakes made by commodity traders is impulsive trading. Too many, too often, trade helter skelter. One day short, the next day long, one day in soybeans, the next day in bellies. Continuous trading tends to become a disease. What has happened is self-hypnosis, which leads one to believe that he knows more than he really does. A little learning becomes dangerous because he knows something, he tends to believe he knows it all. It is always well to look before you leap. Oh, sorry, maybe I'll read it from here. He believes he knows. It's always well to look before you leap. These steps will help ask and answer these questions. Um, what do I know? How should I conduct myself to be in harmony with what I know? What are my beliefs? The danger is that one will always find in his search for the truth that which he wishes to find. The answers are not always easy to find, but one can always try by taking time out to reassess values, each in his own way. For myself, I have found the careful writing of an operating plan well ahead of action to be helpful. If one will get the facts, analyze the facts, build a program of action, and follow the program, he will be well on his way to looking before he leaps again. All right, next one is tips. All right, so on tips, I once thought that somewhere there is somebody who knows the answer to market direction and degree. After many years of searching and contacting the best minds, I now believe that there is nobody who knows and that nobody will ever know. I have never been able to make as much money on someone else's ideas as I have on my own, nor have I ever seen anybody else make and keep substantial sums of money on ideas that are not their own. In, in spite of this experience, it is my belief that vast sums are lost each trading day on tips. Many traders are waiting for tips, waiting to be told what to buy or sell. The explanation probably lies in the observation made by Mark Twain. Only 10% of the people think. 10% think that they think. The other 80% would rather die than think. Another reason for so much trading on tips can be attributed to necessity. Most brokers live off commissions. For the average broker house, tips become a form of chain advertising. A good flow of tips is considered good merchandising. Tip seekers and tip takers are invariably tip passers. Tip broadcasting becomes an endless chain. Tip takers are slaves to the habit. They have difficulty resisting the craving and look forward to these tips, indispensable to their happiness. To be told precisely what to do to be happy in a manner that one can obey is the next best thing to being happy. The belief in miracles, something for nothing, that all men cherish is born of immoderate indulgence in hope. I guess it's on the next page. Moderate indulgence. There you go. In hope, substituting hope for fact is the greatest risk. It is not speculation as practiced by successful traders. How much better how much better to follow the advice of Huxley. Give me the strength to face a fact, even though it slays me. Aside from the fact that tip takers never get rich, there's another and more vital reason to resist all invitations to trade on tips. The great satisfactions in life never come from something without effort. There is nothing that will put you out of the running as a trader quicker than a soft snap. Minds need difficulties in their schedules, just as bodies need roughage in their diets. Why take the hard way? Why not turn our hearts to the soft answers? Because the soft answers simply do not work. The only answer is the hard way built on solid rock of reasoning and experience. This is a very dangerous, uncertain world. Nobody else can solve your problems. Run from the tips as you would from the plague. Adopt the attitude that I don't know it all, you don't know it all, and I am afraid of the man who thinks he does know it all. Regarding the tip passer, I'm sorry, regard the tip passer as one who knows not and knows that and knows not that he knows not. All right. We'll stop there tonight on that. And we'll pick back up on that. Oh wait, hold on. Let me pull that back up because I had, there we go, statistics. I'm gonna jump to the end of my homework here because before I close out of this, statistics, I wanted to go back over this. If statistics can help us solve just one big problem a year, it will more than pay its cost. So we're talking about statistics, and today marks day 14, the 14th day. I did want to pull this in here. So let's see, pull this in here. Today's the 14th day without any positive or negative thousand tick. So again, the last time we had that kind of a run was back in November, December. So this was the extent here. We had that's 15 days, and that went from November 26th through December 17th. And then you see here on December 18th, we ended up with negative 59,793. And what I do is I count every 1 minute on the tick chart. If we're at a negative 1,000, that counts as negative 1,000. If the next minute we hit a negative 1,200, then I take the 1,000 and add that to the 1,200, so on and so forth. So 59 times, basically, we hit under 1,000 on that day or equivalent. So we were probably hitting some negative 13, 1,400s if I'm not mistaken in that day also. So those add up. So anyway, I'm not saying that we'll get that kind of a move tomorrow. However, this is 15 times. I don't have anything else in my recorded history of that kind of extent there. And yet here we are on now 14 days of no positive negative ticks. So again, will these statistics kind of help us? If it just helps to solve one problem, it more than pays for itself. All right, so let's jump in here on my daily. So on the daily, we left a pretty good tail here. What we ended up doing was we had an extreme move down and then a big extreme move back up to close in the upper third of this candle. So we did end up closing back in the upper third. Here, we did do a 1% down and 1% move down based off the close yesterday. We closed at 64.35, so 1% would be 64.35. We did more than that of a move down. Mark Cook defined that technically as a trend day. If you've moved greater than a 1% move. So we did. I still have on my charts here that tomorrow could still be a sell day. So I have a sell day still possible for tomorrow. Eat down into that tail is a possibility. The 60-minute, let's go to the gap chart here. So I'm going to show here on the 60-minute, and bear with this all being crunched, but you can kind of see here the prior gaps. This is back in April, from when we did that capitulation bottom, then we get gap. This is actually a partial gap here because it looks like we came in here and filled part of it. We have a gap back here, another gap here. So let's come up to the more recent ones. Let's see. Okay. So we have these gaps here down below. They're down here at 60.78 and 61.68. But the one that's the closest is this one down here that starts at 6,300, basically 6,303 is where we started this gap down here. We filled these other gaps for now. We have not left any gaps along the way down on this so far, so that's kind of nice. We don't have anything that we have to go back up and fill. Let's just keep that. Oh, market starting. So keep that in mind. We do have additional gaps down below. We have some price overlap that we may eat down into, eating down into this tail today, but or if we get down below today's tail, I should say. All right, 60-minute. Okay, so 120-minute chart. Let me pull over my 120-minute chart. Pull that over here. So on the 120-minute chart, you can see that, well, again, putting this out, my big ones out here, you can see that we don't really have any divergences in the LBR yet. We are staying below. No, auto thing on that. Okay. We are staying below the zero line on that slow line on this move down, just like we've been positive on the daily. When I start seeing this on the 120, even though we come back up here, the slow line is still negative. So that also gives me indication that we could have a little bit further downside tomorrow as a possibility. The 65,000 tick chart, I've got that here. Again, when we made these lows here, it was not done on any divergences. We kind of pushed outside that lower Keltner channel. We've moved back up to the mid Keltner channel here so far, and right now, so far in the Asia's opening here, it looks like we're starting to fail back down below that mid Keltner channel, which is the 20-period moving average. You guys will show that as a 21-period moving average. So if you take your charts, put them on 65,000 tick charts and put a 20 or 21-period moving average, it's interesting. So we, came down, moved back up, hit that moving average. Now we'll see if we have further downside. A little bit on the fast line showing some divergence here, and again, so far that the slow line is still negative on that. So we're going to keep an eye on that. On the internals, let's see, I think that was it on that chart there. So let me go back to my internals here. So on this SPY here, we have, hang on. Okay. So 3 points up from this low here, the VIX, which was at 1430, puts us up at 1730. We moved up there pretty aggressively today and then fell back off on that push back up at the end, after we kind of capitulated down there. Pardon me. So just kind of marking that as 3 points up, that if we get back above that, it could bode a little more bearish overall. Also, this, oops, sorry. We are moving down. We did that tail. We did not really touch the bottom of this channel yet. We got pretty close. So again, I'm still kind of anticipating a little bit of eat down on that tail, only because, like I said, we've had those six waves up. I think people are on just this buying frenzy, like, oh, buy every dip, buy every dip. Well, that may be a good time to not buy every dip, in my opinion. So anyway, that's all I've got for tomorrow, guys. I hope that was a little easier on your screens, a little easier to view today. And let me know if you guys, if that works for you. But see you in the room tomorrow. Let's continue to help each other out. Safe trading, happy trading. Let's all be happy, happy, happy. No, this should be fun. Have fun with each other. So, all right, guys, we'll talk again tomorrow.